All right, let's get right into it. We're going to look at this incredible 20-year investing journey. I mean, how do you turn $0 into $500,000? It sounds like a magic trick, right? But it's not. It's actually a method, and we're going to break down exactly how it works.
And you know, it all starts with this one really powerful idea. Picture it. You're 20 years old, you've got no savings, no real plan. And then you make one single small decision. This whole explainer is really about that one choice and the massive, massive ripple effect it had over the next 2 decades.
So let's rewind all the way back to the beginning, age 20. And you know, like a lot of us at that age, it was pretty much paycheck to paycheck. The stock market, it just seemed so complicated, like some exclusive club for people who were already rich. The thinking was you need a ton of money just to get in the game.
But then came this huge aha moment, this breakthrough realization. See, when you're young, you have this asset that is way more powerful than a big pile of cash. You have time. And time? Well, time is the secret ingredient that lets even small amounts of money grow into something truly significant.
And this is exactly how it all started, with a simple, totally manageable commitment. Just $100 invested every single month into a low-cost S&P 500 index fund. All that means is you're buying a tiny piece of the 500 biggest companies in the US. It's not about picking the perfect stock or trying to time the market. It's just about being consistent.
So 5 years go by, right? And that steady habit turns into about $7,300. Now look, this isn't get-rich-quick money. It didn't create a millionaire overnight. But what it did create was something way more important for the long haul. It built momentum.
Okay, so let's jump into the next phase and see how this thing really starts to build. Around age 25, a more stable job meant a little more income. Now, instead of just upgrading the lifestyle, the decision was made to upgrade the investments. That monthly contribution jumped up to $500. And this is where the strategy shifts from just getting started to really, truly accelerating.
Now, what's so cool about this next stage is how the real magic of long-term investing starts to show up. See, the growth isn't just coming from those monthly deposits anymore. Nope, something else is starting to take over.
So the absolute key here, the engine behind all this growth, is compound interest. It's when your money earns a return, and then not return starts earning its own return. It creates this amazing cycle that just gets more and more powerful every single year.
And this is the perfect way to think about it. It's like a small snowball rolling down a really long hill. At first, it's slow. It barely picks up any snow. But the bigger it gets, the faster it grows. Your investments, they work the exact same way. The growth starts to become exponential.
I mean, just look at this. That first jump from $0 to over $7,000 took 5 whole years. But then, check out the leap from age 35 to 40. The portfolio grew by over $300,000 in that same 5-year period. That, my friends, is the snowball effect in action. When you really think about it, this entire 20-year strategy boils down to these 3 simple but totally non-negotiable rules. First, start as early as you possibly can. Second, be consistent. Invest every month. Don't worry about the market's ups and downs. And third, reinvest every single penny to keep that compounding engine running hot.
Okay, so of those 3 rules, that first one, starting early, is without a doubt the most powerful. But let's actually put some numbers to that. What's the real measurable cost of waiting? Let's take a look at what just a 10-year delay does to your money.
Okay, so imagine we have 2 identical investors. They both put away $200 a month. They both get the same average returns from the market. The only difference is that one of them starts at age 20 and the other one waits until they're 30. And the results are, well, they're staggering. By age 40, the person who started at 20 has almost $120,000. The one who waited just 10 years, they've got $52,000. Think about that. That's less than half the money for the exact same monthly effort. That right there, that's the true cost of waiting. So really the crucial point we keep coming back to is this classic saying, don't stress about trying to find the perfect day to invest. The most important decision isn't when you start, but simply that you start. Trust me, your future self is going to thank you for every single year you gave your money to grow. And in the end, this is what it's all about. The real prize at the end of this 20-year journey isn't just a number on a screen. It's freedom. It's having the power to make life choices based on what you're passionate about, not what you're forced to do.
It's the ability to work because you want to, not because you have to.
So we're left with this final thought. We just walked through one person's 20-year story. But your own financial story? That's a blank page right now. The principles are simple. The path has been laid out. The only question left is, what story are you going to write?